Good morning and welcome to this Tuesday, October 15th, 2019 edition of Trading Places Live on StockCharts TV. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and I'll be your host of Trading Places Live, featuring everything you need to know as you prepare for the trading day ahead. Tell you what, Zach, before we get into anything, I got a couple things got to mention. Number one, hopefully you got your tax return in and you're not a procrastinator because today's the last day. You got your tax return in?
My tax return?
Yeah. April 15th, if you extend it, you can go all the way to October 15th. Today is the day.
My goodness.
Yeah, I'm already in. I have filed my return.
CPA joke right there, Tom.
I have filed my return on the 15th many times. I can tell you that. So I'm a CPA.
Joke.
Yeah, so it's kind of a thing that I used to do. I used to procrastinate, but not this year. It was filed long ago, so I'm in good shape. But hopefully,
you can actually postpone all the way out to October 15th.
Yes, you can. I did.
Obviously, we know that I don't do that because I'm shocked, right?
Yeah, you don't even know. You didn't even know it was available. Well, now you know. You have to pay your taxes by April 15th, so you got to make sure you get the money in. But as long as you cover your liability, you can extend filing until October 15th.
Well, there we go.
Right, so that was one thing. So now I got the second thing for you. Okay, so did you watch the stock market yesterday at all?
A little bit. Not. It's kind of difficult towards the close because we have that last show at the end of the day. So
yeah. All right. Well, I did three exciting things yesterday, and you can probably guess what order they were in. I watched the stock. This is in terms of excitement. So I watched the stock market, I watched paint dry, and I watched grass grow. Can you do you have any idea which was the most exciting? It wasn't watching the market, I can tell you that.
It was that boring.
It was bad. It was a holiday. It was Columbus Day, so a lot of folks off, banks were closed, and it was just a slow day. I mean, watching the market yesterday, if you hadn't known better, you might have thought it was closed because it wasn't moving. But anyway, let's get into all this stuff going on. Dow Jones Industrial yesterday was down 29 points. The S&P 500. Let me go ahead and show this screen. That will help. The Dow Jones Industrial Average down 29 points. The S&P 500 was down 4. The NASDAQ down 8. The Russell 2000 down 6. Mostly single digits there. Looking at some of the sectors, you can see technology down 0.05. Discretionary 0.06. I mean, you get the picture. There really wasn't a whole lot. I could spend a lot of time going through these charts, but really not much changed yesterday. It was really a boring day after the trade talks at the end of last week and the volatility that we saw, the gap up and the sell-off on Friday. Really, Monday, yesterday was just ho-hum, very boring. Really didn't need to watch, to be honest. Taking a look at the 10-year Treasury yield. Let me get an update, see what's going on here so far. We are down a couple basis points, so currently at 1.70%. No economic reports out today. We will see some more economic reports out later this week, especially tomorrow. We're going to get retail sales out, so you'll want to watch for that. But overall, not a whole lot going on this morning in terms of economic reports. Earnings reports, that's a different story, and we'll get into that in just a minute. I do want to mention a couple other stories this morning. We've got Abbott Labs coming out. They've authorized repurchase of up to $3 billion in the shares. Wanted to just point out that the stock had come down a little bit below price support, and you can see it's been trending lower on a relative basis, but I wanted to just show you this price support because now I'm wondering maybe if it was just a little bit of a head fake. But right here, you can see that prior high. We broke out, came down just a couple of different days here, a little bit below this 80 level, came back up, tested the 20-day. It'll be interesting to see whether or not the repurchase agreement, the new deal, up to $3 billion in shares, whether or not that's enough to lift this stock back up above its 20-day moving average and try to right the ship. But wanted to mention that one. Another one, and I'll be talking about this chart later, so I'm not going to talk about it right now. But that will be NVIDIA. NVIDIA had their price target raised from $225 to $250 at Bank of America Merrill Lynch. But I will be covering that in the upgrades and downgrades in just a bit. Let's go ahead and move on to earnings spotlight. And earnings season is underway. And I have to say, it got off to a bang this morning. JP Morgan, this was a really nice report on JP Morgan. It's going to be very interesting to see if we can clear that 119.27 level. I believe that was the all-time high close right here. Yep, 119.27. We saw that on September 13th. Last time I looked in pre-market, we were up a couple bucks. So we were up at 118, around 118.50 or so, I believe. So we got a little bit of work to do. But if we opened above that 119.27 number, I think that would be very bullish. I think JP Morgan's going higher. This has been one of the better performers in the bank space. When you look at this relative strength here, JP Morgan was at a 52-week high relative to the banks. And even though the banks haven't been great performers relative to the S&P, look at JP Morgan. JP Morgan up near its 52-week high relative to the S&P. So I think overall you got a good bank here. They came out with really good numbers. They posted revenues of $30.06 billion. Market was expecting $28.47 billion. And then on the bottom line, $2.68 versus $2.45. So the numbers really weren't close. Really good report coming out from JP Morgan. Some others were mixed, but there were still some other good reports out there as well. United Health came out better than expected and also raised their guidance. They raised their earnings per share higher for fiscal year 19. United Health beat on their top line, $60.35 billion. Market expecting $59.84 billion. Bottom line, $388 versus $376. United Health was up a couple of percent in pre-market. Still in this downtrend, though, even a couple of percent. We're talking about maybe getting back up near the recent high. It's got some work to do. We want to get this stock back up above its 50-day moving average, begin to trend higher. We'll see whether or not this earnings report is the catalyst to do it. You can see that the healthcare providers group has been downtrending, and UNH has been downtrending relative to its healthcare provider peers. So this has not been a very good-looking chart. I wouldn't have been expecting a whole lot out of the earnings report. It was better than expected. Let's see if things turn around. Next up, let's take a look at Goldman Sachs. Goldman Sachs was disappointing. And honestly, I wouldn't have expected a whole lot here. It's been kind of a flat chart. You can see double top, got double bottom, sideways consolidation. We'll see which way we break. Based on what I was seeing in pre-market, I don't think we're going to be breaking either way on the open. So we'll just have to see how trading goes today. Looks to open about 2% lower, again, based on the last price I saw, which was probably 20 or 30 minutes ago. They did beat on their top line, $8.32 billion versus $8.31 billion. So it was a slight beat in revenues, but they came up short on their bottom line. Market was expecting, well, according to Zacks, the expectation was $5.03, came in at $4.79. I also saw another estimate that was $4.81. Either way, $4.79 comes in below expectation. So mixed report for Goldman Sachs. Let's see. Citigroup also came in a little mixed today. And this one surprised me. I thought Citigroup would have a much better report. When you look at this one relative to banks, it wasn't at the high like we saw with JP Morgan, but just a few months ago, it hit its high, had weakened a little bit on a relative basis, and was starting to strengthen again. Citigroup did come up a little short on their revenues, $18.57 billion. They were expected to come in about 18.60. So a little weak on revenues. Bottom line, 207 versus 196. So a pretty good number on the bottom line. I did not see their guidance going forward at this point, so we'll have to wait to see. In pre-market action, Citigroup was down a fraction. It was down about 0.2%, which for this stock would be probably about 45 cents, something like that. All right, J&J, another big one coming out. And the earnings reports are just going to continue to pick up steam here over the next 3 to 4 weeks. The first couple of weeks, this week, next week, will be most of the Dow components, a lot of the really large S&P 500 components. And then we'll start getting into the second tier. We'll get into a lot more of the technology companies and so forth. But we got a lot that we will be going over here on Trading Places Live over the next few weeks. Johnson & Johnson. So they came in better than expected, top and bottom line. They also guided higher. Their revenues, $20.73 billion. Market expecting $20.14 billion. And then earnings per share, $2.12 versus $2.01. Stock was up about 1.5% in pre-market. So you're looking at maybe a couple bucks. That's not going to be enough to clear 134, which is gap resistance. Let me go ahead and annotate this. But you can see that there was a pretty significant gap down over here from about 134 down to 132. And since that gap and moved down, we have not been able to get back through 134 on a closing basis. We had a false breakout there, went back, tested the 20, came back up, tested that 134 level, one more time to the downside. Right now, I would say that this stock is in a 126 or 127 to 134 trading range. So let's see which way we break out of it. When we look on a relative basis, we have started to see a little bit of relative strength in Johnson & Johnson relative to its pharma peers, but the pharma still struggling relative to the S&P. So it's just not in a good group. And until that money begins to rotate into the pharmas, I expect that we will continue to see Johnson & Johnson struggle. But watch that 134 level. That's going to be a key. If we get some volume and can break above that, perhaps it will make a run back into the mid 140s to challenge the previous highs in June of 2019 and December of 2018. All right, what else do we have in terms of earnings? Let's see. Well, BlackRock reported, BLK. I didn't really get much of a feel on pre-market action. I didn't see any trades. The stock matched expectations revenue, did beat bottom line, 715 versus 699. Stock's been going sideways here for a while. It's in a weak asset manager group. Here's the relative strength of the asset managers. So it's not in a very good group, and honestly, it's not been a very good stock within this space the last few months. It was leading for most of the year. Past few months has been backing off a little bit. Volume trends aren't bad. A lot of mixed picture here technically, which kind of goes along with their mixed revenue number that came out and just matched. Let's see, one more maybe. OMC, this is Omnicom Group. They did miss on their top line, $3.62 billion versus $3.64 billion. They beat on their bottom line, $1.32 versus $1.30. Stock was down fractionally, actually very little, 0.21% last time I looked. But stock overall doesn't look very good to me. Media agencies has just been the bad part of this stock. Been trending down. You can see relative to the S&P, the media agencies group just hit a 52-week low. This has actually been a pretty good stock within the space, but if the money's not coming into the space, it's really hard to gain traction, and that's been a big problem for OMC, especially the past few months. All right, let's go ahead and move on to upgrades and downgrades. There were a number of upgrades and downgrades. I'm just going over a few of them. If you want to check out upgrades, downgrades, you can go into briefing.com. In fact, I'll show you how to get there if you ever want to check these out. So if you go into briefing.com and you go over here under calendars and go down to upgrades, downgrades, that's where I get these from. So I just go through and pick out a handful. But if you want to go through and get the list, see who's upgrading them, what they're having to say, what they're upgrading them from and to, their price target. Some of these you can see they're actually raising price target 25 to 29 on BMCH. So this is where I get the information. You have upgrades, come down here, you got downgrades, and then if you keep going, you got coverage initiated, coverage resumed, and then reiterated. So a lot of information there. If you're wondering, sometimes I see stocks moving pre-market and I don't see news. A lot of times it's because they've either been upgraded or downgraded. All right, back to the upgrades, downgrades charts, and let's start with, I'm going to pull up that BBBY chart. This is Bed Bath & Beyond. The stock had the big gap up last week, big volume, pulling back. I'm thinking you might still get this stock at 11. I know it's getting upgraded. We'll see where it goes today. If it doesn't make a breakout, though, there's obviously 12, your support. But there was a double top here at 11. And I wouldn't be surprised if we go back down there. You'll see the rising 20-day coming up from underneath. So Bed Bath & Beyond is one that I think we could see a little bit lower. And if we get the opportunity, $11 I think would be a really good reward to risk entry. Next up, BMCH. This is one of my favorite stocks in the home improvement area. I like Home Depot. I'll talk about that one in a little bit in one of the other episodes or one of the other segments. But BMCH, you can see, did print a nice hammer down here. Recent support at 25. Now today they're getting the upgrade. I would expect it's probably going to make another run for that 26.5 level, maybe even make a breakout. But you can see the huge move up and the sideways consolidation. 24.5 to 25 has been very, very good support here. Looking at it from a relative perspective, you can see that the stock has made these huge moves, consolidates, huge moves, consolidates, and now might be poised for another pushback to the upside. Next up, another home improvement retailer, Lowe's. Lowe's Companies, LOW, getting the upgrade today. It's got some overhead work to do around 115 up to maybe 117. You can see these prior two tops. Down below, 105 seems to be excellent support. So I think we're just in that trading range for now. Maybe with the upgrade, we'll get the breakout and some volume, but until I see that breakout, I'd be a little careful up near the top of the chart. OLLI, this is Ollie's. Ollie's has been hit hard. We do have a double bottom in play. If we could get back up and take out about 65.5, that would be pretty bullish, especially if we clear that 50-day moving average in the process, because we have been trading below for a while. But this is starting to look maybe like an exhaustive gap. I don't think it really confirms until we can get back up and clear that 65.5 level. So watch that. But I do like this double bottom in play, and the upgrade certainly won't hurt. Moving on to the home builders, TriPoint Homes, TPH, getting an upgrade. I really like this chart, even though on a relative basis, it's not as good as some of the others. This has actually just been in a really good space. So when you get the breakout, it gets up to 15.25, pulls back close to 14.25. Well, that's your breakout level. So broken resistance becomes support. And then also you've got the 50-day moving average right underneath. So TPH, not surprising to get an upgrade at this level. Probably, I shouldn't say it, but probably we've got some folks buying the stock here. Heavy volume, stock pulls back, then we get the upgrade. Next up, downgrades, BLMN. We're going to start with Bloomin' Brands. See what this one looks like. Well, it's been all over the place. Looking at the relative, mostly in the restaurant space, it's been moving lower. We had the one stretch here. Obviously, that's pretty obvious on the chart. Other than that, it's been mostly a relative underperformer. So I'm not shocked by the downgrade. It was at the 50-day. Probably with this downgrade, if it loses the 50, it could be well on its way back down to where it was before. I'd be a little careful with Bloomin' Brands. Next up, Terex. Terex I would really be concerned with, because we've got that double bottom. Here's the high we got to get through. We don't want a lower low, though. We do not want to go back down and break below $23. So we want to be careful with this downgrade, see how the stock trades. A breakdown would not be good. But you can see, again, the stock downgrading relative to its peers. It's been doing this for months, mostly throughout 2019. And so we shouldn't be surprised when we get bad news, whether it's a downgrade, lowered guidance, whatever. TEX not looking good. I think it's got some work to do. All right, how about relatively speaking? Let's talk about some areas of the market that we want to pay attention to. I'm going to start again with internet stocks. I'm still waiting patiently. We're halfway through October. For those of you who are not familiar, let me pull up the seasonality for you. This is generally a very, very strong month. October is typically extremely strong for internet stocks. You can see it has gone up more in the month of October than any other month. The percentage, 78% of the time over the last 19 years, we have ended the month above the beginning of the month. But more importantly, during October, the average gain for this entire index is 8.3%. And we really haven't seen that when we look at the chart. We went down initially in October. We've come back up. We're up slightly from where we were, maybe 1%, but that's a far cry from that average of 8%. So will we continue this uptrend? I do find it encouraging that we're back up above the 20 and the 50-day moving average. So that is something to pay attention to. But longer term, when we get into the 3-year weekly chart, I think we still got an uptrending area of the market. 1850 to 1900 is going to be a really key area. So if we do continue to uptrend, that's where we could be getting up toward that 8% level by simply going up and testing these recent highs. Next industry group that I want to show you is the Broadcasting and Entertainment Index. I'm going to stretch this out a little bit because I think this is a chart that's worth looking at. We had the huge move up here, the gap up, the pullback, and you can see this 1440 to 1450 area has been very important for this group. We went down, we tested it about a week and a half ago. We've come back up. So far, we just can't get through that 20-day moving average. So this is an area of the market that is struggling on a relative basis and needs to get back through these moving averages to begin to right the ship. One group that is not struggling is footwear. Nike got another upgrade yesterday. Nike broke out, as did the footwear index. You can see that the PPO on the group looks good, relatively speaking, relative to the S&P 500. This is one of the strongest areas right now. So you want to pay attention to the footwear group, especially if we get a pullback. I remember mentioning when Nike broke out, and I'll just bring that chart up, show you this. But when Nike broke out, the gap up and the pullback here, so the buying really kicked in around 90 because we had gapped up to 92, came back to 90, and then we went up to 95. Came back down, look at that 90 area holding right along with that rising 20-day moving average. This is kind of similar to what we were looking at earlier with the upgrade on, Bed Bath & Beyond, BBBY. Where it's made that move up. And I said, if it pulls back to price support along with that 20-day moving average, it's very similar to what Nike did. So try to look at these patterns and just remember them, because a lot of times the history will repeat itself in the market. All right. How about non-durable household products? Durable household products. This is one, I'm going to go back 2 years here, because this is one that had a lot of tops coming across here at 240. Remember this? Kept saying we needed to get that breakout, Well, we've gotten the breakout. So unless this is a head fake, and if it's a head fake, you'll know, because we'll fail at that rising 20-day moving average if it pulls back. But as long as we hold now the rising 20-day, this is a group that is beginning to show some nice relative strength. So stocks like Newell Brands, NWL, this is one maybe to take a look at. You can see it's starting to strengthen. Another one might be WHR, Whirlpool. You can see this one breaking out, holding that 20-day moving average. Helen of Troy, huge earnings report out recently right here with this move up. Came all the way back down. I wouldn't be surprised to see this move back toward that high. And then maybe one company that's really struggled, but might have a change of character here, coming above the 50. The 20's now above the 50. Watch to see if we get another breakout on Tupperware. I think that would be bullish if we can get back through about 16.5, something to keep an eye on. All right, let's move on to Turning Point. This is where we take a look at some stocks that could be at turning points on their charts. So I'm going to stick with this longer chart. I'm not sure if it'll be beneficial or not, but IPGP, which is IPG Phototronics, it's got gap support right in here, but you can see this stock's been downtrending for a while. It really needs to make a turn where it is right now. Recent lows in October, if they don't hold, then we're going to be back down to these August lows, which is another $10 lower. I don't know. I think IPGP really needs to make a turn here. CAG, Conagra, you can see coming across 27 to 28 for the last 3 or 4 months has been holding. Stock got up to 32. Look at that false breakout. And see, this is what I was referring to. You get the breakout, it doesn't hold above that high. And look at, we went right back through that 20-day moving average like it wasn't even there. That's how you know you got yourself a false breakout. Probably a lot of folks selling on that false breakout. Now we've got to see if the 27, 28 level can hold. As far as some Dow stocks, a couple of these I'll go over. Cisco in a downtrend. I think 46 pretty obviously is a big level. I'm going to shorten this chart up so we can look at these candles a little closer. But you can see we came down, closed right at 46, actually 46.05. This is a big level for Cisco. It needs to hold here. Disney, I mentioned the broadcasting and entertainment group and the gap up that Disney had. We are just, 2 weeks ago, we came down right to that gap, top of gap support. I think this 125 to 127 area, very, very critical. Disney on the move up, can't get through the 20-day. So is this a turning point at the 20-day? Do we break down? I don't think so. I think we're going to hold it, but we've got to get back up above that 20-day moving average. Let's see, one more. And this one is one that's been moving higher. I mentioned Home Depot earlier that I like it. I do like it, but look at that candle from 2 days, or actually from Friday. We tried to make the breakout above 235. We failed. We turned back down. I don't know. I'd be a little careful here with Home Depot. Short term. Long term, I think it looks great. I think it will eventually get the breakout. Short term, maybe we get back down to that 20-day moving average. If we do break out above 235, I don't need to see the volume we saw in August, but I would like to see the volume pick up. All right, 3 you must see. Always like to finish with 3 you must see. So let's start with Shopify. Shopify is one that is beginning to turn back around. Those of you who have been following me for a while know that Shopify is one of my favorite stocks in the software space. And I was looking at this stock to try to hold in this range. You can see we had support up around 310. Then we had support at 280. This was the kind of final line in the sand. And if you notice, Shopify put in a beautiful reversing candle. Looks like a piercing candle, maybe bullish engulfing. I don't think it quite gets there. I'm going to go with piercing candle off of this downtrend. And now we've got an uptrend started. The 20-day did not hold the stock back for long. Now it's up at the 50-day. And I tell you what, if this thing gets back through 360, I think it's going to go all the way back up over 400. And as we approach earnings season, would not surprise me. So Shopify is my third chart here. Number 3. So let's move on to number 2. What's number 2? I'm going to go with AXP, American Express. Stock's been downtrending for a while. In fact, on this one, I want to show you a relative chart, because if you're expecting a lot out of American Express when they report, you're one of the few. Wall Street has been selling the stock relative to its peers. You can see it down at a 52-week low. The group overall had been very strong relative to the S&P. So the fact that American Express was going down didn't stop it from performing well versus the S&P 500 because the group was so strong. But my point here is that there's a lot of other stocks in the group that I would probably buy before American Express. The relative strength in the past 2 months has really cratered. Look at the volume coming in the last 2 months, the downtrend in play here. I think this is one you want to be really careful of. So I am going to treat this as my number 2 stock in the 3 you must see. Finally, let's take a look at Microsoft. This is my final stock. I really like Microsoft. I think Microsoft's going higher. Again, I think we are consolidating. I would not be surprised to see it move higher into earnings, before earnings, but if not, I expect a really good earnings report. Microsoft continues to be one of the best stocks in the software space, as you can see here. It's been a great leader relative to the S&P 500. The group software held the June low. It also held the relative June low. That's really what I was watching. And you can see software beginning to strengthen again. So I think this is a stock that looks pretty good. I'm going to just annotate a couple areas on the chart. One would be your support, which I think is down at this low in early August, around 131, 131 and a half. And then the high that came in around 142. You can see the double top. We're in a trading range, but I think Microsoft eventually goes higher here. So that is the number 1 of the 3 you must see. And that is going to be a wrap for today. I want to thank all of you for checking in. Love to have you here at Trading Places Live. Appreciate you stopping by. Trading Places Live is here on StockCharts TV every Tuesday and Thursday from 9 to 9:30 Eastern. I also conduct a similar Trading Places Live show Mondays and Wednesdays from 9 to 9:30 Eastern at Earnings Beats. Be sure to check out my blog, Trading Places Live, or Trading Places with Tom Bowley, each morning as I provide additional stock market insight there. Have a great day, everybody. I'll see you back here on Thursday. Happy trading.